Let's get in now. Our next market guest, Sumit Poddar, founder and CIO at Tikona Capital, is with us. Sumit, thanks for taking out time for us. 2022 has gone by, 2023 has come in. What sort of themes do you expect? You expect it to be a more polarized market? This year we have seen IT has gone down, banks have done well, new technology has gone down, defense has done well. You expect such sectorial churns to continue?
Sure, Pankaj. Thanks a lot, first of all, for inviting me on your show. And standard disclosures apply as far as our firm is concerned. We are a SEBI registered intermediary as such. So, yes, you have brought in a very interesting point, and let me just kind of take a bit of a pause and try to put in some key learnings as far as 2022 is concerned. I think India delivered a very strong equity outperformance, and that was primarily because of the good things that were done during the crisis. I mean, I think we didn't leverage out. Debt to GDP was quite strong. Even with the geopolitical situation, I think India handled the situation quite well. Ideally, the whole world grappled with the inflation, but India could actually have cheaper crude being sourced, which is what ensured that stability is in place. So a combination of relative inflation handling and as well as the stronger balance sheet helped us take care of this crisis situation quite well. On top of it, I think in addition to handling the crisis quite well, we have also thrived this particular situation. As you may be knowing, the anti-fragility concept of Nassim Taleb, he mentions in his book that anything or any organization, country or society, when they thrive during the period of crisis, they build in a anti-fragility, which is what India built in as far as 2022 is concerned. So we saw handling of crisis quite well, but at the same time, we demonstrated well on mass scale adoption of technology, rather it be India's stack as such. And on top of it, we were in the leadership position as far as global platform is concerned. And all this led to our outperformance. And despite a $20 billion kind of a selling that we saw, FIS selling that we saw during 2022 was fully absorbed. So that's the backdrop that we are entering in 2023 is concerned. And you brought in a very interesting point where we saw IT going down, all the new age companies going down, banks outperforming, and on top of it, this while we may see that the whole year is just mid single digits, but there are sectors that have delivered handsomely, rather it be something like a PSU or to some extent, to a large extent, banking per se, and then to offset them was definitely IT. Now coming to 2023, I think interesting.
Yeah.
Themes are emerging interesting.
Sumit, Sumit, let's take it one by one. So IT, which you mentioned, we just highlighted that last Jan, IT companies' PE multiples were as high as 30 plus. And this time around, earnings cut have happened, stocks have underperformed, PE multiples are low, but they are still higher than averages. You, of course, started as started your career with IT, covering IT. Can you just tell us what is your sense about this IT? You think in Jan it was pricing in extreme over, that nothing will change tomorrow. What are they pricing in now?
Correct. I mean, see, again, a very interesting question. And even, I mean, if you look at IT sector as a business model, it's a cash throwing business model. And if we look at the ROCs and ROEs or ROICs thrown by these businesses are quite strong, and they remain in top quartile despite the slowness that is expected. Another trend, if we look at, or another area that we need to focus on is this time IT cycle is different as compared to what happened in couple of cycles earlier. Indian IT services is totally kind of engraved into global technology supply chain as such. So IT services compared to past definitely has kind of got stitched into the overall global supply chain. Secondly, what has happened is earlier technology was being used for scale, bringing down cost, and they used to be large scale transformation projects. But post-COVID, what has happened is most of the projects are largely small and they are not very large scale transformational projects. And thirdly, what is happening is without technology, none of the businesses can either grow or maintain scale. So that these are the differences which entails for a relative premium as compared to past two cycles. In addition to that, I'll also want to add that we have been talking about recession since last almost 6 to 12 months. This was a higher interest rate induced or higher inflation induced recession narrative that is being talked about. See, most of the time, if there is a drastic or a dramatic fall in any of the sectors or markets, is if when any unknown event crops up or if there is a surprise. I think to a large extent, the narrative related to recession is getting priced in. People know about it. Even corporates can plan it well as compared to shock of recession. So I think IT as a sector, while a couple of quarters, first 2 quarters could be in a watch mode, but from an annual basis, I believe that it will be back into flavor. I think it has corrected dramatically as far as 2022 is concerned. It will be back in 2023, may not be immediately, but definitely 2023 will see comeback of IT as a sector.
So, with last time around, you very clearly pointed out to us that, the companies to watch out for in the next decade will be the new age company, whether, they make money, they survive, they don't, listing happens, it doesn't happen. The real wealth will be created over the e-tech and the sort of rage that we have seen. We've
Right.
seen a significant correction. It's a significant supply-led correction.
Right.
How should one evaluate these companies? Because most of the market participants are of the view that markets are still still finding a price or a real valuation for these names.
Definitely. I mean, Pankaj, you brought in a very interesting point. While there was a bubble as far as the valuations of these companies were concerned, primarily because everything was GMV related. So, if we compare GMV to what eyeballs were during 2000, I think that was the case. But what happened during 2022 will at least bring in sanity, and that is why we are pointing 2023 as a year of execution as well as moderation. And on top of it, any or every company which is kind of focused on what or how to execute best on the top line, on the profitability as well as the capital efficiency will gain in this particular period. Yes, many of the business models or new age business models have corrected well. Valuations have come in. I mean, I won't say they are attractive, but at least they are far lesser than what they used to be. But what, as an investor, we need to continuously stick to the basics in terms of any businesses which are creating a competitive advantage will survive this carnage which is there. So I think there are a couple of models, rather it be in on the PPC side, which is creating a bit of a differentiation, or niche segments where there are very less listed entities. I think those are the one likes of Nika or so could see a bit of a
Right.
comeback as far as this year is concerned.